Hi, everyone. It's Wes and Austin from Westwood again, and today we will be talking about something that impacts each and every one of us during this time of the year. I'm talking about, of course, the United States Individual Income Tax Return, or Form 1040 for short, or just 1040 for even shorter. And while most of us either complete our 1040 using tax preparation software or maybe hiring a CPA to prepare our 1040 for us, it's probably been a minute since most of us have spent any time with the actual Form 1040 itself. It is, of course, until today. So sharpen your pencil and kick up your heels while Wes and I walk you through how the 1040 is used to report your income, deductions, credits, and ultimately how much tax you might owe. We're going to have a lot of fun today with everything we want to cover, so let's get into it.
Sounds good. Let's take it right from the top. Um, so, why are we even talking about this in the first place? What gives the government the right to come and collect a portion of what I earn year after year? And why can't the government just tell me what I owe instead of making me do all of this work? Um, well, taxes in general are contributions imposed by a governmental entity upon individuals for the purpose of use and service of the nation state and under the guise of a variety of labels like tolls, tributes, duties, customs, and subsidies, to name a few. And an income tax is one of the main government imposed contributions in the United States, which is levied on the net amount of private individuals and business entities' profits, like a corporation. Over 50% of the total revenue earned by the IRS each year is from the payment of income taxes. So, getting this information prepared and filed as accurately as possible and as timely as possible is important to both the taxpayer and to the IRS.
That's right. And the United States authority to impose these income taxes comes from a few sources. The biggest and most familiar source of authority is going to be the United States Constitution, specifically Article 1, Section 8, Clause 1, which was further fleshed out upon the ratification of the 16th Amendment in 1913, which states that, and I quote, the Congress shall have power to lay and collect taxes on incomes from whatever source derived without apportionment among the several states and without regard to any census or enumeration. And this authority was then enshrined in 1939 when the United States took all of its existing federal tax laws floating around at that time and compiled them into a single central source of information known as Title 26 of the United States Code or the Internal Revenue Code, which we will just refer to as the code for the rest of today's discussion. Now, the code was later overhauled in 1954 and then again in 1986, and it is the 1986 version of the code that is the definitive source of all tax laws in the United States.
Great information. Thanks, Austin. In addition to the U.S. Constitution and the Code, U.S. tax laws further developed through revenue rulings and revenue procedures that apply to all taxpayers, as well as private letter rulings, which only apply to specific individuals or entities. Together, these sources create the landscape for the annual ritual of preparing our 1040s and the filing of which is the end of the cycle until the next year for 99% of U.S. taxpayers. The remaining 1% continues to be subject to the taxation authority in the form of audits, deficiencies, taxpayer protests, and administration appeals, all of which is beyond the scope of today's discussion. But for the rest of today, we will focus on what all goes into the Form 1040, which has been the main United States income form since 1914.
All right, so now that we've taken care of today's history lesson, let's talk about the latest version of the 1040 and how to get started. Again, assuming that you are not using tax preparation software or working with the CPA, then you'll have to take some kind of step to track down a blank 1040 from somewhere, and there are a few options to choose from. Now, the IRS or Internal Revenue Service provides a PDF version of the Form 1040 on its website that you can fill out manually. And we've got a link to that website here on the slide we've got in front of you at the moment. You can also access the Form 1040 using the IRS's free file fillable forms online platform, which for the 2022 tax year will remain open and active until October 16th of 2023. And you also have the option to pick up a copy of the Form 1040 from your local IRS Taxpayer Assistance Center, although you may have to call ahead of time to schedule an appointment. Or you can just request that the IRS furnish a copy to you by calling 1 800 829 3676 Monday through Friday from 7 a.m. to 10 p.m. local time.
And the Form 1040 is needed for every U.S. tax return, and most U.S. citizens will report their information on that form. However, taxpayers aged 65 and older may use a relatively new version of the 1040, which is called the Form 1040 SR, and was initially rolled out in 2019. And non resident aliens have to use a version of the 1040 called Form 1040 NR. Please also note that since 2019, taxpayers with simple tax situations can no longer use the Form 1040 EZ or Form 1040A versions and instead have to use the standard Form 1040. And while people with more complicated tax situations may need to complete additional forms and schedules, every single taxpayer filing their income taxes will need to fill out Form 1040 as a part of the income tax process.
So let's take a look at the Form 1040 itself, and specifically the Form 1040 for the 2022 tax year. This form takes up a total of 2 pages and is organized into the following section headings. You've got filing status, digital assets, standard deduction, age slash blindness, dependents, income, tax and credits, payments, refund, amount you owe, third party designee, sign here, and paid preparer use only. So by organizing the 1040 this way, it creates a walkthrough for the taxpayer to first input specific details about their personal information, followed by a calculation of the taxpayer's taxable income or adjusted gross income or AGI, which we'll explore in a minute, and then offsetting any taxable income by claiming any deductions and or credits for which the taxpayer may qualify. The 1040 ends with determining whether the taxpayer is entitled to a refund or how much the taxpayer owes, followed by the taxpayer's signature and occupation, and if the taxpayer works with a tax preparer or accountant to file the 1040, there is a space for that professional to submit their information as well.
And just before I go into this next point, I also wanted to put a shameless plug in for Wealth Insights. We talked about this in depth in some of the importance of being organized and the advantages of organizing certain tax documents or relative financial documents. But before getting started, the taxpayer should gather all of the taxpayer's pertinent tax documents for the year. These may include any forms W-2, forms 1099, and any other forms detailing the taxpayer's income and deductions for that given year. Once the taxpayer is ready to begin, then it's just a matter of working through the 1040 on a step-by-step basis, similar to what Austin was just walking through. Step one is to complete all of the personal information set out above the income section at the top of page one. This section contains a few basic questions about the taxpayer's personal details, such as filing status, identification, contact information, and dependents. When entering any names here, be sure to enter them exactly as they appear on their social security cards for the taxpayer, the taxpayer's spouse, if applicable, and the taxpayer's dependents as well. Using a different name than your legally recognized name could result in the 1040 being rejected or facing processing delays.
All right, now before we get into the meat of the 1040, the rest of the 1040 can be summarized into 5 steps. Step one is calculating the taxpayer's gross income. Step two is where the taxpayer will determine their adjusted gross income, or AGI, like we mentioned recently, by subtracting any above the line deductions from the taxpayer's gross income. From there, step three involves applying additional below the line deductions from the taxpayer's AGI in order to find the taxpayer's taxable income for the year. In step 4, the taxpayer's taxable income is then multiplied by the applicable tax rate for that taxpayer, the product of which is the taxpayer's tax for the year. And the fifth and final step is subtracting any eligible tax credits from the taxpayer's tax for that year. If the resulting difference is a positive number, then the taxpayer owes tax. And if that number is negative, then the taxpayer is due a refund for the year.
Exactly. So here's where the math begins. Lines 1 through 9 on page 1 of the 1040 under the income section is where the taxpayer will report all income from whatever source derived, as set out in section 61 of the code. Now, gross income has some meaning beyond section 61 of the code, which Congress has expressly established because of this broad definition under the code. Some of the items specifically included in gross income are compensation for services, gains derived from dealing in property, interest, rents, dividends, and even income obtained from illegal activities and gambling winnings. The taxpayer will enter his or her earnings as reported on a Form W 2, along with any interest, dividends, pensions, annuities, individual retirement account distributions, or Social Security benefits, as the case may be for that taxpayer.
And please note that if the taxpayer has any additional sources of taxable income, such as from a business or a rental property, a farm, or unemployment compensation, then the taxpayer will need to fill out an additional form. And that additional form is Schedule 1 to the 1040. Once they've completed that Schedule 1, it would then be attached to the taxpayer's Form 1040 to report those additional earnings. But please note that Congress has specifically excluded certain items from gross income, such as gifts, inheritances, amounts received under accident and health plans, employer contributions to accident and health plans, income from a discharge of indebtedness, and meals and lodging furnished to an employee for the convenience of the employer, just to name a few. Now, totaling up all of these income sources as entered in the taxpayer's 1040 and Schedule 1, if applicable, will yield the quote, total income, end quote, sum on line 9 of the Form 1040, which will be used in determining the taxpayer's AGI under Step 2.
And for step 2, you will start with the total income sum on line 9 of the 1040 and make any necessary adjustments to that total income. These adjustments are called above the line deductions, and they are called that because you have to subtract them from your total income. The resulting difference is referred to as the taxpayer's AGI, or adjusted gross income, like Austin previously mentioned. And the AGI amount is critical because it is the baseline income amount that the IRS uses to determine a taxpayer's income tax liability.
These above the line deductions are available regardless of how much income the taxpayer has, unlike below the line deductions, which we're going to get into in just a moment. And taking these deductions will require you to complete Part 2 of Schedule 1, which we've got reflected here on the presentation deck. And that also gets attached to the taxpayer's Form 1040. So please note, though, that some of the above the line deductions used to be available in prior years, specifically deductions for certain military members' moving expenses and deductions for alimony payments made pursuant to a divorce or separation agreement or decree entered after December 31st in 2018. Those deductions are no longer available. But once the above the line deductions that are still available to taxpayers have been totaled up, they will be entered in line 10 of the 1040, and the resulting difference, that is the taxpayer's AGI, will be entered in line 11 of the Form 1040.
And once the taxpayer has made the necessary adjustments to his or her gross income and determined their respective AGI, there is an additional category of deductions to consider, which are called below the line deductions. Here, the taxpayer is faced with making a choice to what is referred to as either the standard deduction or to itemize all eligible deductions other than the standard deduction. subject to the limitations set out in Section 67 of the Code. Most taxpayers choose the standard deduction, which is equal to the basic standard deduction and any available additional standard deductions. The basic standard deduction amount is set by the IRS and ranges from 12,950 for a single taxpayer and 25,900 for surviving spouse taxpayers. Additional standard deductions are available for aged or blind individuals, unmarried, non surviving spouse individuals, and individuals claiming dependents for the tax year.
But for the taxpayer who keeps track of everything, he or she can choose to itemize their below the line deductions by completing a Schedule A for the taxpayer's Form 1040. But this method is only permitted if the taxpayer's total itemized deductions are greater than the standard deduction amounts available for the applicable tax year. And please note that electing to itemize below the line deductions is a much more involved and detail intensive process, but it is incredibly useful to the taxpayer if the total amount of eligible deductions does in fact exceed the standard deduction amount. These deductions include unreimbursed medical and dental expenses, but that's only to the extent that they exceed 7.5% of the taxpayer's AGI. That also includes state and local taxes paid by the taxpayer, mortgage interest paid by the taxpayer, gifts of cash or other property to charities, unreimbursed casualty or theft losses, or other expenses related to getting married, the birth of a child, or even retirement. Bearing that information in mind, the taxpayer will enter the total below the line deduction amount on line 12 of the Form 1040 and then enter the qualified business income deduction if the taxpayer owns a pass-through business like a sole proprietorship or partnership on line 13. Then you take the line 12 and the line 13 amounts together, you add them up, and that combined sum will then be entered on line 14. And then the line 14 amount is subtracted from the taxpayer's AGI reported on line 11, the resulting difference of which is referred to as taxable income and entered on line 15 of the 1040.
Okay, so all of that math will now take us to page 2 of the 1040, where the taxpayer's taxable income amount will be applied to the tax rates provided under the marginal tax brackets. The term marginal is used to describe these tax brackets because not all of the taxpayers' taxable income is taxed at the same rate. For 2022, there are 7 federal income tax rates: 10%, 12%, 22%, 24%, 32%, 35%, and finally 37%. The top marginal 37% tax rate will only apply to taxpayers reporting taxable income above $539,900 for single filers and above $647,850 for married couples filing jointly. Also, for qualified dividends and long-term capital gains taxes, they are taxed at lower rates, which are 0%, 15%, or 20% at the high end, depending on the taxpayer's marginal tax bracket. High income taxpayers may also have to pay an additional 3.8 net investment income tax on any interest, dividends, capital gains, rental, and royalty income, as well as non qualified annuities.
Yeah, a lot of multiplication there. But you made it through. Awesome job, Wes.
Thank you,
Um,
man.
You bet. All right, so taking it on over to step 4. The taxpayer will need to review and complete Schedule 2 of the Form 1040, which we've got up here on the presentation deck. Um, and that'll be as applicable to ensure that any other pertinent taxes are being identified and reported in an appropriate fashion, like the alternative minimum income tax, which applies to certain high income taxpayers, the self-employment tax, and household employment taxes. Now, we're not going to go through each and every one of these. We're just showing you where they are in the 1040 and things to be mindful of if they apply to you. This area can get tricky, so heads up and pay attention. Once the appropriate tax brackets are applied and the applicable Schedule 2 amounts are calculated and reported on the Form 1040, the total tax amount will be entered in line 24 of the 1040.
And with that, we're just about done, but still have some more work to do. In the fifth and final step, the taxpayer will need to identify and apply any tax credits to which that taxpayer may be entitled. Credits are different than deductions because tax credits reduce the total amount of tax owed by the taxpayer on a dollar for dollar basis compared to deductions, which reduce the total amount of the taxpayer's income that will be subject to the income tax.
There are many tax credits available, but some of the more common credits are the child tax credit, the American Opportunity Credit, and lifetime learning credit for qualified tuition and fees, the child and dependent care credit, and the mortgage interest credit, just to name a few. Now, the taxpayer will need to review and complete a Schedule 3 of the 1040, which we've got here on the slide, and ensure that any other pertinent credits are being identified and reported in an appropriate fashion. The taxpayer will then subtract all of those credits, along with any other taxes that the taxpayer has already paid for the year, from the taxpayer's calculated tax that was entered in line 24 of the 1040. Depending on the amount of applicable credits to subtract from the calculated tax, the resulting difference will either be in the form of a refund, as reported on line 34, or in the amount that the taxpayer owes for the year, as reported on line 37. And upon completion of this step, the 1040 must then be signed by the taxpayer and the tax preparer, if applicable, and thereafter the taxpayer may either file the Form 1040 electronically or print and mail it along with the payment for the tax owed by the taxpayer to the address shown in the Form 1040 instructions.
Easy enough, right? But in all seriousness, the 1040 is a highly detailed and complex process that may be overwhelming for your average taxpayer. And that's why it's a good idea to either engage a CPA or use tax preparation software to ensure that the correct forms are being used and the reported information is being calculated and prepared correctly.
And bearing all that in mind, this is always a good time to connect with your advisor at Westwood for assistance with assembling and organizing the taxpayer's pertinent tax documents for the year, as well as communicating with your qualified tax professional on your behalf to help simplify your involvement in the 1040 reporting process. Now, we covered a lot of material in a short amount of time today, and while this wasn't as exhaustive of a conversation as it could be, our hope is that we have armed you with enough information to feel some additional confidence during the 2022 tax season, especially if you need to participate in an informed discussion with your CPA along with your other advisors. As always, we appreciate you taking the time to listen today, and we look forward to next month's discussion. Thank you.
Thank you, guys.